These are game-changing moments for Indian entrepreneurs. We can imagine if cloud is the biggest revenue guzzler for the mega companies, whether it is Meta, Google, Amazon, etc. We are able to do inventions even in the cloud thing, which could be decacorn companies. So if we are doing something in the semiconductor side, we may not be able to scale our companies to the level that they could be unicorns and decacorn while we are holding that investment. While we are seeding that business, it could be a very, very important element for acquisitions by the large corporations for them to have that high-speed compute power in the semiconductors happening from Indian innovations. So what we will say is that India ecosystem is well entrenched with the developed market. There are exchange of ideas and thoughts that are happening between both the markets, and for us to be able to.
So I have a slight issue over there, because if the big guys start acquiring the smaller players, right? If the smaller players work on the model of build to sell, then the power of the next generation of AI development will rest in the hands of few rather than many, right? And you don't want that sort of consolidation. You don't. I mean, that's the reason why, well, you have the Competition Commission in the US thinking about overseeing how big NVIDIA gets, and maybe they don't want NVIDIA to get that big. So can we avoid that?
Oh, yes. The strategic exits were the only option for us until 3 years ago in India. What has happened in the last few years, the buoyancy of the India public market, and particularly the tech stock listing, has been very well received. Every month we get around $3 billion of domestic pool of capital getting into the public markets. And the tech IPOs, 27 tech IPOs have happened in India in the last few years, and the good part is 20 of them are profitable now. Because there are tech IPOs, because they are profitable, and there is another increasing trend that $20 billion worth of IPOs are planned in the next 12 to 18 months. So there's a large amount of buoyancy happening. A company with $100 million of revenue in India today can be listed either on a main browse and with a lesser revenue, even in a small exchanges. So as a VC, our preference would be that the founder remains in that business for the rest of their life. They continue for perpetuity. There should not be any reason for them to exit.
Sure.
The good part is, to your concern, there is an environment that is coming along, and in that particular environment, we will encourage our companies to list rather than being acquired and consolidation happening without much of thinking.